Hi everyone, welcome in our new video series Concept of Banking. In this video series, we will be going to discuss about the concept of banking system in our India and abroad. So today we are going to discuss about basic concepts of banking. So further, step by step, we will be discussing all details of bankings which are important for our banking exams. So today this is our first lecture, so don't wasting time, let's get started our first video. So before starting, one request to everyone, please like, share and subscribe my channel. So let's start it. So in this slide we'll be going to learn about basic concept of banking. So the banking system of India is the base of the economy and economic development of the country. It is the most leading part of the financial sectors of the country, as it is responsible for more than 70% of the fund flowing through different financial sectors in our country. So our bank is what? Reserve Bank of India. So basically the banking system has three primary functions. Okay, so number one is operation of payment system, number two is depositors and protectors of people's savings, that means the which amount by the people's deposit, that amount also need to protect. Okay, so after that, issue loan to individuals and companies. These are primary functions of our bank. And basically the banking system in India can be categorized in two phases. Okay, we can divide our banking system into two categories. So number one is pre-independence phase, which is include 1786 to 1947, and post independence phases, which is include till from 1947 to till the date. So the post independent period may further be divided into three phases. Again we can divide this part into three phases. So number one is from 1947 to 1969. This is called pre-nationalization period. After that, 1969 to 1991, it is called post-nationalization period. And then last, liberalization period from 1991 to till date. So now we are going to define the banking. So what is the definition of banking? As per the section 5B of Banking Regulation Act 1949, banking is defined as accepting for the purposes of lending or investment or deposit of money from the public, repayable on demand or otherwise. That means what amount the depositor deposit, that amount can be repayable, also withdrawable by check, draft order or otherwise. So banking company means any company which transact the business of banking in India. Company means any company as defined as section 3 of the Companies Act 1956. Includes a foreign company within the meaning of a section 591 of that act. Okay, so next one is characteristics of bank and features of banking. So what are the characteristics? Number one, it may be an individual, firm or company. That means a bank can become individual also, firm also company also. It is a profit and service oriented institutions. That means bank has need a amount of profit and service oriented. It act as a connecting link between borrowers and lenders. It deal with money, we everyone know. It accept deposits from public. It provides advances, loans, credit to customers. It provides payment and withdrawals facilities. It provides agency and utility service also. So, function of bank. Number 1, primary functions. The primary functions of commercial banks can be classified into two types. Primary functions. So, basically function of banks are number 1, primary. So, primary functions we can divide it two parts. Number A is accepting of deposits. This is what bank accepts deposits from the public and provides safe custodian to their fund. That means what amount you have deposit in our bank account, that amount be safe. This guarantee gives by our banks. Deposits are important sources of banks fund. They can be classified into following categories. The deposit also classified, we can savings deposit. These are the small amount accepted by the banks in forms of deposit from the public to encourage savings. Here a customer can make limited number of withdrawal from such deposit. That means in savings account we can deposit a small amount also, but we can't withdraw a limited amount of money from the savings account. Fixed deposit, these deposits are made for a long term investment. That means highest rate of interest. So, if you fixed your money in a bank account, then you will be getting higher interest rate compared to savings deposit. And one thing is that you cannot withdraw the money before the maturity period completed. After that, current deposit. These deposits are mainly used in the purpose of business. Okay, current deposit is used only on purposes of business. Here a customer can make unlimited numbers of deposit as well as withdrawals. That means unlimited, there is no any limit to withdraw and deposit the money. All money are payable on demand. Usually banks do not pay any interest in respect of such deposit. After that, last one is recurring deposit. Recurring deposit is what? It is a form of saving deposit. In these types of deposit, at the end of every week or month, a fixed amount is deposited regularly. The amount can be withdrawn only after a specific period. The rate of interest on such amount stands favorably as compared to the rate of interest on the saving deposit. That means if you start depositing money in recurring deposit, then you will be getting higher interest rate compared to savings deposit. Now, the amount, which amount we have saved in our account, they have also need to earn money. That means bank have need to also earn money. So, bank what they doing? They doing lending of the money. So, a major portions of the deposit received by banks is lent by it. This is also the major source of banks income. However, lending money is not withdraw risk, and therefore a banker must take proper precautions in this process. The lending money be in any of the following terms. So, number 1 is loan. When a certain amount of money in the form of an advance is given for a certain period to the customers is called loan. Interest is charged on it. That means if you want to take a loan, then you have need to give also interest to bank. Cash credit. Cash credit is what? It is an agreement between a banker and a customer to draw a certain amount of money. A customer can withdraw the money and as and when required in installment. Interest is charged only on the amount withdrawn by him. That means you will be getting cash credit, but if you don't use that cash credit, you have not to need give any interest. But if you used that amount, then you have need to give the interest. Overdraft. Overdraft is what? Overdraft is an arrangement between a banker and his customers by which the customer is allowed to withdraw over and above the credit balance in the current account up to an agreed limit. The interest is charged only for the amount sanctioned. It is given either on personal security or on the security of the assets. discounting and purchasing of bills. Banks grant advance to their customers by discounting bills of exchange when the banks grant advance on the bills before the date of maturity. Then the interest till the date of maturity from the date of sanctioning the advance is deducted. This deduction is called discounting. Okay. So next is secondary function. We have learned the primary function. Now we are going to learn secondary function. Secondary function is collections of draft, bills, check, dividend, etc. on behalf of customers. Executions of standing orders of the customers, namely payments of subscriptions, rent, bill, promissory notes, insurance premium, etc. Conducting stock exchange transactions, that is purchasing and selling of securities for the customers. Acting as a correspondent or respective of customers, other banks and financial corporations. Functioning as an executor, trustee or administrator of an estate of customers. Preparations of income tax return, claiming of tax refund and checking of assessment on behalf of the customers. Now come e-banking. What is e-banking? E-banking is electronic banking, has many names like e-banking, virtual banking, online banking or internet banking. These are called e-banking. That means here we can't need to deal directly by bank. It is simply the users of electronic and telecommunication network for delivering various banking products and services. Through e-banking, a customer can access his account and conduct many transactions using his computer or mobile phone. That means you can using your mobile and computer making a huge amount of payment through a huge amount of transactions in your computer and mobile phone, which are we everyone use by using the apps like Google Pay, Phone Pay, etc. E-banking is safe, fast, easy and efficient electronic service that enable customers to access bank account and carry out online banking service 24/7. Okay. E-banking enables of the following. These are you'll be pausing the video and write down it. Okay. So now types of bank. We have need to know about what are the type of banks in our country. So number one bank is central bank. That means there is one is central bank, which bank is overall father of our other banks. Okay, you can say father of other banks. That is what? Reserve Bank of India. Okay, it is RBI. The bank that act as a central monetary authority of the country and serve the government is central bank. The main functions of a central bank are issue of notes, providing and conducting banking service for the government, providing banking service to other banks. Example, the Reserve Bank of India RBI is the central bank of our country. The Central Bank of India is the Reserve Bank of India RBI. It controls and regulates the entire banking system, functions, issue currency, controls monetary policy, banker to government, bankers bank. Important, it is established in 1935. So then next one is commercial banks. So basically commercial banks comprise of public sector banks, private sector banks and foreign banks which accept public deposit, advances, loans to the public and offer other related services to earn profit. Example, Union Bank of India, HDFC, Canara banks. Also I have attached some images of the banks, ICICI Bank, HDFC Bank, SBI. These are the commercial bank also. The types of commercial bank. So we have already learned about commercial bank. Now we will be going to learn types of commercial bank. First one is public sector banks, majority share owned by government. Okay, State Bank of India, Punjab National Bank. These are some examples of public sector bank. Private sector banks owned by private individuals or companies, HDFC, ICICI, Axis, etc. Foreign banks, banks headquartered outside of India. So example, Seed Bank, HSBC. Okay, these are some foreign headquartered bank which are also run in our country. So now number 3, developments of bank. It is a development banks. It is a financial institutions concerned with providing all types of financial assistance to business units in form of loans, underwriting, service, investments and guarantee operations and promotion activities. It aims at industrial development and economic development in general. Example, IFCI, Industrial Financial Corporations of India, IDBI, Industrial Development Bank of India, etc. That means a development bank is a bank that provides long-term loans and financial support to promote economic development in key sectors like industry, agriculture and export. So there are some development banks in our country. Industrial Development Bank, here these are Industrial Development Bank, these are Agricultural Development Bank, these are Export Import Banks, this is Housing Development Banks. I have given some name of banks. Okay. So next one is Investment Bank. Okay. Here I have given, okay, there is no investment bank example. Okay. Investment bank or industrial bank. Okay. These are Industrial Development Bank. Okay. So these are financial intermediaries that acquire the savings of peoples and direct these savings into business enterprises. Checking fund, the Assam Cooperative Apex Bank Limited, the Industrial Cooperative Bank Limited, these are some examples. And investment bank, industrial bank is a financial institution that helps companies raise capital and provides long-term finance for individuals' development. It mainly deals with big companies. Okay, that means investment banks deal with direct companies, industries also, and capital markets, not the general public. That means these banks are not deal with general publics. Now next one is cooperative banks. Cooperative banks are what? These banks are concerned with mobilizing savings and stimulating agricultural investment in the country. It can be classified into 3 types of bank. Number 1, state cooperative banks, example the Assam Cooperative Banks Apex Limited, Central Cooperative Banks, Andhra Pradesh State Cooperations Bank Limited, primary agricultural credit societies, Assam Vegetable Growers Cooperative Society. These are some examples of cooperative bank. Next one is regional rural bank, which are very famous, RRB. It is also called agricultural bank. These banks are oriented towards meeting the needs of the weaker sections of the society, consisting mainly of small entrepreneurs, farmers, agricultural laborers, example Assam Gramin Vikas Bank, National Bank for Agriculture and Rural Development Bank, which we have also called NABARD. So this ownership structure, regional rural banks have 3 tiers ownership. Central government is 50%, state government is 15% and sponsor bank, this was 35%. Sponsor bank is usually a public sector bank. We will be discuss it later also. Okay, what is sponsor bank? Establishment, established under the Regional Rural Bank Act 1976. First RRB, Prathama Bank 1975. Next one is non-banking financial company, which is called shortly NBFC. This is what, according to RBI, it means a financial institutions which is company and non-banking institutions whose principal business is receiving of deposits under various schemes or agreement or lending or in any others manner. It can be classified into cent banks, commercial banks, indigenous bank, example Aditya Birla Finance Limited, Bajaj Finance Limited, Muthoot Finance, Mahindra and Mahindra Financial Services. These are some examples of NBFC. An NBFC is a financial institution that provide banking like service such as loan, investments and asset financing but does not have a full banking license. That means this type of banks has no any full license of banking. It is regulated by Reserve Bank of India. Now next one is 8, exchange bank. This is what? These banks are involved in buying and selling of foreign currencies, okay, and accepting foreign bills of exchange. Example, Bank of India, Bank of Baroda, these are some exchange bank. Small finance bank. Now coming to the next topic, small finance bank. Provide banking service to small borrowers, focus on farmers, MSMEs, small traders. Examples, Ujjivan Small Finance Bank, AU Small Finance Bank, Equitas Small Finance Bank. These are also some examples of small finance bank. Now 10, payment banks. A payment banks is a special types of bank that accept deposits and facilitate payments, remittance, but cannot give loan or issue credit cards. That means this type of bank cannot give you any kind of loan or credit. Introduced by Reserve Bank of India to promote financial inclusions and digital payments. The facilities of these banks are can accept deposits up to 2 lakhs per customer. That means this type of bank cannot cross the limit of 2 lakh. No loan facility, there is no any loan facility, no credit cards, but can issue debit ATM cards. Okay. Focus on digital transactions and small savings target users, migrant workers, rural populations, small earners. Indian Post Payment Banks, Airtel Payment Banks, these are some example of payment bank. One famous bank which is recently closed, that is Paytm Payment Bank. Thank you everyone. We'll be shortly meet in our next video. So thank you for watching my video, and if you want the PDF note, then you have need to follow my Telegram channel also. And last, please like the videos and share the videos. Thank you. Bye bye.